Hello students, today in this video we are going to discuss the second chapter of accountancy of class 12th, accounting for partnership basic concepts. Today in this video we are going to discuss the topic past adjustments. Sometimes a few omissions or errors in recording of transactions or the preparation of summary statements are found after the final accounts have been prepared and the profit distributed among the partners. It means when final accounts are being prepared, sometime after the preparation of the final account, it may be discovered that some omissions or errors are there regarding the interest on capital, interest on drawings, interest on partner's loan, partner's salary, partner's commission, or outstanding expenses. Or there may be some changes in the provisions of partnership deed or systems of accounting having impact with retrospect effect. So it means if after the preparation of the final accounts it is discovered that these kind of errors or omissions has been done in the books of account, so for that particular purpose we do past adjustments or the adjustment entries. As the name suggests, past adjustment, it means under this situation we are going to do the adjustment that has been done wrong in your past. Means while preparing your books of accounts it is found that some errors are or omissions are there. So we don't make any rectification in the old books of accounts. Rather, we pass rectifying entries so that the impact of the same can be made nil. In partnership, this can be done either with the help of profit and loss adjustment account or it can be done directly in the concerned partner's capital account. Now to understand this concept, let's take this example. Ramiz and Jahir are equal partners. The capital as on 1st April 2015 were rupees 50,000 and rupees 1 lakh respectively. After the accounts for the financial year ending 31st March 2016 have been prepared, it is discovered that interest at the rate of 6% per annum as provided in the partnership deed has not been credited to the partner's capital account before distribution of profits. So, by reading the text, you can make out that here the partnership firm forget to give interest or forget to provide interest on partners capital at the rate of 6% per annum. So now the adjustment has to be done. Now how you are going to rectify it? To rectify it, first we have to make the working note. Like we have to provide interest on capital at the rate of 6% per annum on the capital of Ramiz and Jahir. So while calculating the interest on capital or Ramiz's capital, it will be 50,000 into 6 by 100. It means 3,000. Whereas in Jahir's capital, it will be 1 lakh into 6 by 100. It means 6,000. So it means you forget to give or you forget to credit Ramiz's capital by 3,000 and Jahir's capital by 6,000. Now what you have to do? You forget to credit the capital accounts, as we have already discussed in our previous video how interest on capital is calculated and how partners capital are being prepared. So we have to provide interest on capital, and interest on capital is being provided to the partners on their credit side, or you could say on the credit side of the partners capital account. So you forget to provide interest on capital on their respective capital. Now what we have to do? We have to credit partners capital account by interest on capital. Now if we forget to provide interest on capital, the same amount would have been credited to them because interest on capital is an expense for the business, as it would not have been debited to profit and loss appropriation account. So this interest on capital would have been distributed among them in their profit sharing ratio. Now what we will do, we will calculate it. It's coming 3,000 and 6,000. Now we'll rectify it. Clear? Now how you are going to rectify it? So profit and loss adjustment account debit to Ramiz's capital account 3,000 and to Jahir's capital 6,000. Then the total of this is 9,000. If interest on capital would not been given to the partners capital, then the same amount would have been distributed them in their profit sharing ratio, because as we know, if as interest on capital is an expense for the business, if expense will not be taken into account, clear, this is going to raise the profit, distributable profit among the partners. So it means if 9,000 would not have been debited to the profit and loss appropriation account, this would have increased the distributable profit among Ramesh and Jahir as 9,000, and it has been distributed among them equally because they are equal partners. So at that moment of time, clear, the entry that would have been done is Ramesh capital account debit, Zahir capital account debit to profit and loss adjustment account. So as they are equal partners, this 9,000 would have been distributed among them equally, that is 4,500 and 4,500. So your entry will be Ramesh capital account debit 4,500, Jahir's capital account 4,500 to profit and loss adjustment account 9,000. So this is how this amount would have been debited to partners capital account. Now on comparing these two journal entries, you can make out that Ramesh capital is to be credited by 3,000, Jahid's capital has to be credited by 6,000, whereas the capital already have been debited by 4,500 respectively. Now on comparing these two, you can make a single entry also. As you can see in the above two entries, Ramesh capital account is to be credited by 3,000 and Jahid's capital account is to be credited by 6,000, whereas in the second entry you can make out Ramesh capital is to be debited by 4,500 and Jahid's capital is to be debited by 4,500. So on comparing these two figures or to these two journal entries, you can do a single entry, clear, and that single entry will be on comparing. As you can see, Ramesh capital has to be credited by 3,000, whereas Ramesh capital is to be debited by 4,500. So on comparing these two, you can make a net impact that Ramesh capital is to be debited by 1,500, means 4,500 debit minus 3,000 credit. So still 1,500 remains at the debit side. Then second, Jahir's capital is to be credited by 6,000, whereas Jahir's capital is to be debited by 4,500. It means the credit side exceeds by 1,500. How? The credit of Jahir's capital is 6,000, whereas the debit of Jahir's capital is 4,500. So on comparing these two figures, you can make out that Jahir's capital is to be credited by 1,500. So with the help of this, you can make out the entry. The adjustment entry is what? Ramesh capital account debit to Jahir's capital account 1,500 and 1,500. So this is how you can make your journal entry regarding adjustment, or you could say you can make your adjustment entry. So this is how the adjustment entries are being done, or the past adjustment being done if the adjustment has to be done regarding interest on capital. Now the same can be directly done in partners capital account. How you are going to do it directly in the partners capital account? For doing it directly in the partners capital account, we have to prepare a adjustment table. Under adjustment table, what you will do, you will, on the very left of yours, you will write the particulars or the details, then the name of the partners, Ramesh as per the question, Jahir as per the question. Now amount which should have been credited as interest on capital, as I've told you, they forget to give interest on capital at the rate of 6% per annum. As I've told you, interest on capital is to be credited to the partners capital account. So it means this amount has to be given to the partners on their capital. So this is the amount that has to be paid by the firm or has to be provided by the firm on partner's capital. So that's why it has been written credited 3000, 6000. It means this is the amount that has to be paid by the firm to Ramesh as 3000 and to Zahir as 6000. Whereas the total of this 3000 and 6000, 9000, clear, this is an expense for the business as it was not provided. So it's going to increase the divisible profit of the firm. So this divisible profit would have been credited to them in their profit sharing ratio. So you will write for that amount actually credited by the way of share of profit, which I am telling this 9000 would have been distributed among them in their equal ratio or as per their profit sharing ratio. So it has been credited to Ramesh as 4500 and to Jahir as 4500 as they are the equal partners. Now what you will do, you will compare these two figures. Amount that has to be or should have been credited or amount actually credited, means what amount they have to be credited and what actually has been credited to them. Now on comparing, what we'll find that Ramesh, who has to be credited by 3000, already has been credited by 4500. It means we have to take 1500 back from Ramesh because we have exceedingly credited to him. So taking back the amount back from the partner means we have to debit it, because debit to the partner means decreasing the capital account of that particular partner. Whereas in case of Jahir, as the amount that has to be credited to him is 6000, whereas the actual amount that has been credited to him is 4500. So still 1500 has to be given back to Jahir. So giving amount to the partner means you have to credit the capital account of that particular partner. So here you have to give 1500 again to, or you have to credit the capital of Jahir by 1500. So on comparing the figures, you can make out Rami's capital has to be debited by 1500 and Jahir's capital has to be credited by 1500. So with the help of this, you can make out your entry, adjustment entry, and your adjustment entry will be Rami's capital account debit 1500 to Jahir's capital account 1500, and the narration will be adjustment for interest on capital made through partner's capital account. So this is how the adjustment entry is been done in the concerned partner's capital account. So you can do your adjustment entry either way. You can do it with the help of profit and loss adjustment account, or you can do it directly in partner's capital account. Now with the help of this another example, illustration 12, you can understand the concept more clear. Under this text, you have been given Nusrat, Sonu and Himesh are partners sharing profit and losses in the ratio of 5:3:2. The partnership deed provides for charging interest on drawings at the rate of 10% per annum. The above example is about interest on capital. It means interest on capital has to be provided to the partners or to be credited to the partners. But here in this text, in this example, you have been given the partnership deed provides for charging interest on drawings. It means this amount has to be taken by the firm from the partners as interest on drawings at the rate of 10% per annum. The drawings of Nusrat, Sonu and Himesh during the year ending 31st December 2015 amounted to rupees 20,000, 15,000 and rupees 10,000 respectively. After the final accounts have been prepared, it was discovered that interest on drawings has not been taken into consideration. Give necessary adjustment journal entry. Now, by reading out this text, you can make out that there are three partners, Nusrat, Sonu and Himesh. They are sharing their profit and loss in the ratio 5:3:2. Deed provides for charging interest on drawings at the rate of 10% per annum. Now, Here you have to calculate interest on drawings. Clear? Now how you are going to do the adjustment entry for the same? Now interest on drawing, the drawings made during the year amounted to rupees 20,000, 15,000 and 10,000 respectively. So here you are going to calculate the interest on the drawings. So for Nusrat it will be 20,000 into 10 by 100. For Sonu it will be 1500 into 10 by 100, 15,000 into 10 by 100. For Himesh it will be 10,000, 10,000 into 10 by 100. So it's coming 2,000 for Nusrat, 1500 for Sonu and 1,000 for Himesh. So these are the amounts that has to be debited, because interest on drawings will be debited to partners capital account. So while writing the particulars, you will write the amount which should have been debited, means this is the amount that we have to take from the partners capital, or we have to take it from the partners. So we'll debit it. So we have to debit Nusrat by 2,000, Sonu by 1500 and Himesh by 1,000, and the total is 4,500. So these are the amounts that we have to debit, means we have to take from the partners but we forget to take from them. And as we know, interest on drawings, clear, is the income for the business. As this interest would not have been charged from the partners, is going to reduce the divisible profit. It's going to reduce the divisible profit. So the divisible profit would have been decreased by 4,500, because as we know, this interest on drawing is being written on the credit side of profit and loss appropriation account. As this would have been given, so the divisible profit would have been increased by 4,500. So in this case it has not been given, that's why divisible profit has been reduced by 4,500. Now the second thing that has been written on the particulars is amount that should have been credited by way of share of profit. As I've told you, if this interest on capital would have been taken into consideration, it is going to increase your divisible profit by 4,500, and if it would have been, then it would have been distributed among the partners in their profit sharing ratio. So this 4,500 would have been, clear, distributed among Nusrat, Sonu and Himesh in the ratio 5:3:2. So what we'll do in our working note, we'll distribute this 4,500 among Nusrat, Sonu and Himesh in the ratio 5:3:2, means 4,500 into 5 by 10 to Nusrat, that is coming 2,250. 4,000 into 3 by 10, 4,500 into 3 by 10 to Sonu, and it's coming 1,350. And for Himesh it will be 4,500 into 2 by 10, and it's coming 900 rupees. Now the interest on drawing has to be debited from the partners, and this amount has to be credited to the partners. Debit means we have to take from the partners, and credit means we have to give to the partner. Now on comparing these two figures, or on making the comparison of these two figures, you will came to know that in case of Nusrat, that the amount that has to be debited, or means the amount that has to be taken from him, is 2,000, whereas the amount that has to be given to him or credited to him is 2,250. So on comparison, or on comparing these two figures, you can make out that Nusrat still has to be paid rupees 250 rupees. How? Means 2,250 minus 2,000, still we have to pay, clear, 250 rupees to Nusrat. We have to pay means the firm has to pay, means credit. Now taking Sonu, the amount that has to be taken from Sonu, means debited to Sonu, is 1,500. whereas the amount that has to be given to Sonu means credited is 1350, that is 1350. On comparing these two, clear, easily you can make out that Sonu's capital that has to be debited by 1500, clear, and on the second you can make out it has to be credited. So on the comparison these two, you can make out still Sonu's capital has to be debited. Sonu's capital has to be debited by 1150 rupees, means debit amount 1500 and credit amount 1350. Still the Sonu's capital has to be debited. So you can see in the text it has been written wrong, it should be debit. Now about Himesh. Himesh capital has to be debited by 1000 and Himesh capital is to be credited by 900. So still 100 rupees has to be debited to Himesh, means the amount that has to be taken from Himesh is 1000 and the amount that has to be given to him is 900. So on comparing these two, you can make out still 100 rupees has to be debited or has to be taken from Himesh. It is also written wrong in the text, corrected. So on the basis of the adjustment table, you can make out the journal entry, rectifying entry. So your entry will be as it has been written wrong on your adjustment table. It has been written credit, credit and credit. Nusrat will be credit, Sonu will be debit and Himesh will also be debit. So your adjustment entry will be Sonu's capital account debit 150, Himesh capital account debit 100 to Nusrat capital account 250. So the narration will be adjustment for omission of interest on drawings made. So this is how the journal entry regarding the adjustment will be done. So hope you will like the video. Thank you.